there's one area of finance that's got a bad reputation in recent years, it's definitely Forex trading. Forex trading seems to be awash with people flaunting Lamborghinis and expensive watches, and many of them dubiously probably haven't obtained that money through actually doing Forex trading. So I thought it was about time to give this a try myself, see what all the fuss is about, see whether it really is a good opportunity or whether it is just a huge scam space. So this video is documenting what I've done over the last probably month or two, just in the background while I've been running this channel, just while I've been testing it out. Now if you're new here, my name is Chaz and I go by the name of the Risk On Investor, and I run a little series on this channel where I try out different, whilst I hate the term, it's probably the best term for it, side hustles. And you can go back and you can see the previous videos that I've done. I'll leave a link down in the description below. You'll see that I've tried building websites. You'll see that I've sold low content books on Amazon. You'll see that I've done sports betting. There's a few different ones, generally with actually quite positive results. And so I thought it was time to give Forex trading a go. Now, if you're someone that's already subscribed to the channel, then you may not have a clue what Forex trading is, since I've never covered it on this channel before, and I wouldn't say it's necessarily a particularly niche area, but it's certainly quite separated from what I usually talk about. So just to make sure we're all on the same playing field, I just want to lay down a few basics just before we dive into what I did and what the results were. Now, if you've ever been on a holiday and you've had to change some money, then you've actually taken part in the Forex market. So Forex as a word is just a combination of two other words, so foreign exchange. And the Forex markets just track price discrepancies between different currencies. So for example, you could have the Euro US dollar market, which is the largest Forex market, and that tracks the ratio in price between $1 and what its equivalent euro is worth, or €1 and what its equivalent dollar is worth, depending on which way around you want to look at it. Now, I didn't necessarily actually realize how big the Forex market was. Now, it's dominated by large institutions because obviously if they're trading internationally, there's currency risk there that they may want to hedge, or they may need to buy goods in a different currency to the currency that they own. So there's all these different factors that influence the market. And it sounds like it's around $6 trillion is traded every single day in the market. Just to put that into context, that's around twice the size of the entirety of the UK's annual GDP, but traded in just a single day. So as a market itself, it's not dominated by these kind of small-time traders such as we would be if we're looking at this. We're talking about institutions here that manage hundreds of millions or billions, banks, hedge funds, family offices, that kind of institution. That's what we're talking about here, and that's what really seems to drive the market. So now I knew what I was delving into, I thought it was about time to do some research. And I watched quite a few hours of videos here, I read some books, I read some papers online, and listened to quite a few podcasts about the topic. And really, I just wanted to share one particular thing that kept jumping out to me as someone who was coming to it fairly fresh. And that's that it seemed to be the consensus that the majority of people who trade the Forex markets lose money. Now, the stats that seem to be banded around was somewhere between sort of 95 and 99% of people. Now, I couldn't actually find a reference to where that stat came from anywhere. So in my own digging, a couple of things that I found was that generally it seemed to be fairly consensus that 70 to 80% of people will lose money in a given year trading Forex. And after 5 years, I found one study that followed a selection of people and suggested that 93% of people gave up within 5 years. So in other words, the number of people that actually make money from Forex is incredibly slim. And I think part of the reason why it has those incredibly poor stats in terms of the number of people that make money is that it's just got an incredibly low barrier to entry to get started. Now, they say that most businesses fail within 3 years, but I'd say most businesses have a higher barrier to entry than Forex markets, because you could now just go and you could download and join a platform where you could just start trading pretty much straight away, whether it be with real money or whether it be with sort of fake paper trading money. And that seems to lead to a really simplified view of the Forex markets, or certainly that's what it felt like as an outsider looking in for the first time. I'd say there's a second reason as well why I think the majority of people lose, and that's because on the face of it, it sounds really, really simple. Like you just need to be able to predict whether something is going up or down in the next short time period. And so just to illustrate that point, let's imagine you just flipped a coin, you got a 50-50 chance. Is the market going to go up? Is it going to go down? But let's say when you took a trade, you would only lose 1% of your account if you were wrong, but you would gain 2% of your account if you're right. So you can see from that, especially if you've watched my sports betting video, which touched on this topic as well, there's a positive expected outcome to that trade. So if you could flip that coin 1,000,000 times, you'll end up generally with more money than you started with, because when your winners win, they're bigger than your losers. Now, just to show you that as well, I've actually done a quick simulation. So this is 50 simulations. Each simulation has 100 coin flips, and each time the coin flip would lose, so I've given one side a win, one side a lose. Every time there was a loss, you'd lose 1% of your account. Every time you won, you'd gain 2% of your account. And you can see here that over time, because there's a positive expected value, the end value of the amount of money that you start with generally rises. Now, there are some areas in the graph where you can see where it dips below the starting amount, but generally they all end up positive. And so why should Forex trading be any different? And this is, I think, the simplicity that sucks people in, is that you can actually be wrong more times than you're right and still make money, so long as your winners are bigger than your losers. So that's all the groundwork laid for kind of what the markets are, what we're up against. We now understand that the majority of people lose money. So next it was time to work out how we can actually trade these markets so I can give them a go. Now, as far as I could tell, there are two main ways of looking at the markets. And this relates to stock trading, this relates to commodities trading, this relates to Forex trading. It's just a general trading philosophy. And that's that there's fundamental analysis and there's technical analysis. And so fundamental analysis really looks just at what's happening in the outside world that might impact the price of what we're trading. So for example, in currencies, it could be one central bank is raising interest rates. That might mean there's more demand to buy into that currency. Because let's say the US had interest rates at 2% and the UK had interest rates at 5%, well, it's much more attractive to hold pounds, because if I can hold pounds, then I can get that 5% reward on it, whereas I can only get 2% on my dollars. So I might sell my dollars into pounds to get that reward, and that will strengthen the value of the pound against the dollar. So that's just one fundamental thing that could impact the price of a currency. There are many other things that could impact it in terms of, say, trade deficits. If people need to have a particular currency to buy goods, then it might strengthen that currency. There's also news data that could affect it. So, for example, if an economy is performing badly, that might lead to a weaker currency. And over the long term, this is what drives the Forex markets. You changing your holiday money, unfortunately, is just a drop in the ocean of that 6 trillion a day trading volume. And there's often a quote that's attributed to Benjamin Graham, sometimes it's attributed to Warren Buffett, and that's that in the short term, markets are voting machines, but in the long term, they are weighing machines. And that relates broadly to this concept that really, in the end of the day, fundamental analysis wins. If you're buying shares in a company, you're buying shares in that company because you believe that revenue will continue to grow, bottom line profits will continue to grow, because why on earth would you buy into a company where all of those things are heading in the wrong direction? Unless you knew of some major catalyst that was coming up. Now, I will say for the purposes of this video, I've completely ignored fundamental analysis. And even though I think that's what drives the markets, I don't think it's very testable. And I want to be able to test something here so I can present some results. Now that leads me on to technical analysis. So that's really what I'm going to be looking at for the rest of this video. And that's because it's a lot easier to test. There's specific conditions that I can look at and repeat and test those, which I can't do with fundamental analysis. Now, just to layer some more complexity on top of this, there's then a couple of different ways to do technical analysis. So there's one that tends to be known as price action, and then there's another that uses something known as indicators. So price action relies on our intuition as humans with a brain to spot patterns in the market. And so generally that looks for what seem to be known as support and resistance lines. So these are points where price seems to be attracted to, and then it either bounces off up or bounces down below from these points. This can also be taken further with trend lines. So if you think the market is trending in a particular direction, you could draw a trend line and you might observe that the price bounces off of that trend line but follows the trend. Now, I did actually try out some of these methods, and I don't know if it's just I got a little bit lucky with it, but I tried trading some trend line analysis over around a year period. I tested a pre-COVID year thinking that the markets were probably a little bit different then. And you can see that actually trading platinum using a trend line strategy, I actually did really well with it. This would have equated to around a 30% return in the year that I looked at. So I do think there's a way to get an edge there, but I am also just conscious that it's not a particularly repeatable, testable method. It relies on you sitting there and spotting certain trends, spotting certain lines. And I'm sure that if you gave someone else the exact same data that I had to try and trade some trend lines, they would draw lines in different places. They might look at different price points that were important to what I looked at. And so therefore it's not really very repeatable. And that left me purely with one option, and that's testing indicators. Now, the benefit of indicators is that you can put them on a chart, they will give a signal, and so I can then check if that's a buy or a sell signal and then execute that trade. There's no personal discretion involved, it's just a simple yes or no is the indicator telling me to buy or sell at any given moment in time. And so that's what I really like for these kind of things, because it's testable and it's repeatable. Now, if this is something you're interested in, when I was doing a little bit of research, I stumbled across a YouTube channel that was known as No Nonsense Forex. Now, it's actually doing something slightly different to what I'm going to do, but it generally seems to follow this indicator strategy. And so if it's something that you want to be looking into or are slightly interested in, then that might be quite a good place to start. So that was quite the journey there. That was a lot of words and a lot of information to take in quite a short period of time. So if you're still with me, well done. So at this point, things started to get a bit down in the trenches for me. I basically just went on websites and downloaded about 50 indicators to test. These were just randomly selected ones. There's no real rhyme or reason to them. I just looked at them and thought, yeah, I'll give that one a try. Hit download. I then had to sit down in front of YouTube for a couple of hours and learn how to program in MQL5, which is a language that a platform known as MetaTrader 5 uses. And that meant that I could program all these indicators, and so I could run automated tests on historical data, which greatly speeded up the process of testing all these indicators. Now, I also needed some kind of quick way of testing them. So what I did was that when the indicator would give me a buy signal, I would look at the average price movement over the last 14 periods, and I would say, well, if it moves 1 times that price movement in the direction that I want, I'll count that as a win. If it moves 1.5 in the direction I don't want, I'll count that as a loss. So the idea here is that I'm just looking purely based on whether it gives me a correct signal to buy or to sell. I'm not looking at how much money was made or how much was lost on the signal. And the idea was that I would use this just to filter down the indicators, try and find some of the better ones that I could then test in a bit more detail. So that started a long period for me of coding up all these indicators, running back tests, leaving my computer overnight to test it for a few years worth of data. I tested this on data from 2018 to 2023, so it was a 6-year period inclusive of that time. And if you're interested, I was using a 1-hour charting time frame. So you can see here, I've then sorted all the indicators that I downloaded and tested into the win rate. And you can actually see there's some decent results there. So there's some results in sort of the 60-odd%, and generally a lot of them were over 50%. There was quite a few that were under 50%, so they were obviously immediately discounted because that's even worse than just a random coin flip at this stage. Now I have blocked out the settings that I used there in black, just so that some of all that legwork and hard work is still at least kept a little bit private. And so looking through that list of indicators, the one that I decided to test in a little bit more detail was the SSL indicator. And whilst you'll see that from the charts that isn't the top indicator in terms of the best one in terms of win percentage, you'll see that it has a lot of trades with it as well compared to some of the others. So over a 6-year period, that's broadly indicating it was taking about 1 trade per week. And the reason I wanted to look at the number of trades as well as the win percentage is because I could theoretically start combining this with other indicators. And if I start doing that, if they're giving conflicting signals at a point, then it's not going to take a trade. And so there becomes fewer and fewer trades. And if we go back to that 50-50 coin flip scenario, because there's a positive expected value if we're winning more than we're losing, then I want to repeat that as many times as possible. Because even at a 50-50 chance, you're still going to end up with periods where you might lose 7 or 8 in a row. And that's going to be semi-common. And so you don't want to just go through those periods all the time. And so if you're not trading very often, say if you're only taking a trade once a month, if you lost for 8 months in a row, that's going to be pretty demoralizing. So I still wanted a good number of trades to be taken so that if I built some kind of algorithm later down the line, even if I lost some of those trades, it would still be a good number to give me a good representation. So it's results time. You've seen how I've picked an indicator that I'm going to use. Now, this is a really simple algorithm. I'm just going to buy when that indicator gives me the signal to buy, and when it flips to a sell, I'll sell out from my buy position and swap to a sell position. Now this is obviously going to give me really different results to my initial testing, because that was just checking to see if it was going the right direction initially. And so it could have obviously, if it had gone the right direction initially, it could have then turned around later, and vice versa. If it had gone the wrong way initially, it could have turned around later. So I did the usual thing that I was doing. I took that SSL indicator, I then ran it on the chart between 2018 and the end of 2023, and here are the results. Now you can see that they're kind of underwhelming, but also slightly encouraging. And so what do I mean by that? Well, they're quite underwhelming in that if you look at the majority of the time, it's pretty much break even, maybe with a slight downtrend over the years. But broadly, just these kind of off-the-box SSL indicator just gave me a break-even amount of money. But you'll see that in 2022, for some particular reason, I think the markets were trending just in a way that was really easy for this indicator to spot. It made an absolute boatload of money in 2022, before seeming to return to its usual just sort of break-even, slightly downtrending approach. Now, obviously, if I was taking that just 6-year period and just looking at the output results, it would look pretty good. But it would also be pretty demoralizing if you went for 3 or 4 years just seeing your algorithm trade neutrally or with a slight downtrend. So when I looked through the results, I could actually see that it was when the market was kind of chopping sideways that this indicator really struggled. My guess is it was constantly flipping between buy and sell signals in those time periods, and so it was just locking in really small wins or really small losses all the time. And so where we're looking for the wins to be much bigger than the losses, they were probably broadly the similar size in this time period, or even slightly less than that. And we can see from the win percentage as well, that wasn't wonderful. And so again, we would need those wins to be much bigger than those losses to make this worth it. Now, just because of the time taken to test all these indicators, I haven't built some kind of full algorithm here where I'm testing it with live money. Partly because I think that would be a little bit reckless with only a few back tests done here, just me writing up some code. I'd probably want to be a little bit more thorough in this, but I think it does show that there is actually some money that could be made in Forex. And now you might look at those numbers after 6 years and see that, well, it's only sort of 20% over 6 years, which isn't wonderful. But just remember, this is just one currency pair. There are 28 currency pairs you could trade. There's a bunch of commodities you could trade as well. You could trade stock market indices. There's loads of markets you could trade here. And say you averaged only, say, 2% per year on each market. Well, if you're trading 30 or 40 markets, you could very quickly build up a huge amount of money, especially if you compounded that over a few years. So I think there's 2 real sides to this video here. I think we can safely say that there is money that could be made trading Forex. I think the fact that some people do it full-time demonstrates that, but the fact that the majority of people fail, I think suggests that this isn't a simple thing. There's a lot more to it. Because there's a lot of liquidity, a lot of people in the markets. The more market participants there are, the more efficient it should theoretically be, and the harder it's going to be to get an edge. Now, I was probably doing maybe half an hour to code each of these indicators up, so that's maybe sort of 20 to 30 hours to code those up. And then when I was running the optimization on each indicator, depending on how many parameters there were to optimize, it was taking my computer running at full pelt, me not being able to use it because it was using all the processing power of the computer. It might take 3 or 4 hours to do that for each indicator. So again, over 50 indicators, there's probably a couple of 100 hours there of my computer churning through numbers. And so just to get to the point where I think, well, actually, you probably could make some money, but I've not got a system here that's viable, there could easily be 300 hours worth of time here that's gone into that. And so if you're expecting to trade the Forex markets and make money quickly, I think you really need to reevaluate where you're coming from. Yes, you might get lucky at the beginning and make some money, but I think to really develop robust strategies is going to take a lot longer than a lot of people realise. Now, especially as well, if you decided not to code them up, it would have taken absolutely forever to go and backtest those manually over those 6-year periods. I wouldn't be surprised if it would take, 30 or 40 hours per indicator to test that. Then imagine if you did 50 indicators as well, and that's just the initial stage before we even build some kind of trading algorithm using them. Having said all that and putting all those warnings in place, I am personally going to sort of tinker and kind of play around with this constantly in the background. I'll probably slow down some of my sort of research and my experimentation a bit, just because I've got other things that I can be doing as well. But I do think that if you put your mind to this for 6-12 months, you could probably start to develop a strategy that might be profitable in that time. And so I'm probably just going to keep playing around with that in the background. And I might do some update videos on that in the future. But for now, I would say I think it is a viable thing to make some money from. But if you're looking for some quick money, this definitely isn't the place to be. But if you are looking to make some money in the shorter term, definitely check out my playlist down below with some of the other things that I've tried out. Because there's some stuff in there that I made some really decent money with, and somewhere it's literally just to swap some time for money rather than building some kind of business or doing a lot of upfront work for payoff that may or may not happen down the line. So this was a bit of a wordy, waffly video, but hopefully it was useful just from an experience point of view, and it wasn't too hypey. I didn't go out and rent a Lamborghini for a day so that I could make this video, as some questionable people seem to do in the space. And if you're interested in more just general finance topics, then hit the subscribe button down below, and hopefully you'll then get notified with future videos that I release. Those generally do seem to be more general finance rated rather than sort of side hustly type videos, but I do these occasionally. And as I said, I've got that playlist down below that you might be interested in if you're new to the channel and watching this video. But in the meantime, the YouTube algorithm thinks you'll like this video. I hope it's suggesting a good one for you, because I don't get to pick that one. So we'll see how well it knows you. And in the meantime, I'll see you in the next video. Thanks very much for watching.